Welcome to Chain Train, your go-to podcast for all things crypto. Today we're diving into major market shifts from Bitcoin's projected $500K future to the biggest crypto heist of the decade. We'll also discuss SEC's evolving stance, Ripple's legal battle, and the impact of fear in the crypto market. Buckle up as we navigate the fast-changing world of digital assets. A Canadian man, Andin Medvedovich, 22, is accused of stealing $65 million in cryptocurrency from KyberSwap and indexed finance between 2021 to 2023. A math prodigy with a master's from the University of Waterloo at 19, he allegedly exploited vulnerabilities in smart contracts to manipulate trading variables and withdraw investor funds. He reportedly laundered funds using blockchain bridges and mixers, even attempting to pay an undercover agent $80K to unfreeze stolen assets. US authorities charged him with fraud, extortion, and unauthorized computer damage, facing up to 90 years in prison if convicted. Medvedovich had also been sued in Canada in 2021 for stealing $15 million in crypto but evaded legal proceedings. Authorities are still searching for him. BlackRock is set to launch a Bitcoin exchange-traded product in Europe within weeks, likely domiciled in Switzerland, according to a source. The firm recently incorporated iShares Digital Assets AG in Zurich. BlackRock, which declined to comment, was among the first to offer Bitcoin spot ETFs after US SEC approval in January 2024. Its main Bitcoin product, IBIT, has grown to $57.5 billion in assets as of Feb. 4. While US crypto firms welcome Trump's pro-crypto stance, European crypto businesses face stricter regulations under the EU's Markets in Crypto Assets regulation introduced in 2023. Standard Chartered predicts Bitcoin could reach $500K by 2028 due to increasing institutional inflows into spot Bitcoin ETFs and declining volatility. Analyst Jeffrey Kendrick notes that as ETFs mature, Bitcoin will become a more stable hedge against traditional financial risks. Under the Trump administration, access to BTC is improving, further driving adoption. The bank projects Bitcoin to hit $200K by the end of 2025 and $300K by 2026. Currently trading around $98. K Bitcoin's gold ratio is at its lowest since November due to rising gold demand amid US-China trade tensions. XRP may recover as recent SEC changes suggest a weakening case against Ripple. The SEC reassigned key crypto litigators, including Jorge Tenreiro, signaling a potential end to the appeal. Commissioner Hester Peirce's crypto task force is reassessing which assets qualify as securities, possibly benefiting XRP. XRP trades within a descending broadening wedge, a bullish pattern, and could rally to $4 if it holds support. Key resistance levels include $2.72, $2.95, $3.40, and $3.55, while support lies at $1.35. Momentum indicators suggest bearish pressure, but a shift could validate a bullish breakout. The cryptocurrency market has entered the fear zone, with the fear and greed index dropping to 38, signaling cautious sentiment. Despite this, Bitcoin is near $100K and the altcoin market cap has surged 40% to $1.24T. Historically, fear phases precede market rebounds, as seen in late 2024, when optimism over US elections fueled a rally. However, no clear catalyst exists this time, leaving the market uncertain about its next move. While fear can create opportunities, sentiment alone won't dictate the future, and investors remain watchful for potential triggers. Coinbase has urged US regulators to clarify guidelines allowing banks to offer crypto services, citing legal uncertainty. It sent letters to the OCC, Fed, and FDIC arguing that existing laws permit banks to provide crypto custody and execution services, but regulatory ambiguity has deterred them. Coinbase alleges the FDIC pressured banks to sever crypto ties and has filed lawsuits against the SEC and FDIC over debanking concerns. Under President Trump, crypto regulations have eased, including repealing an SEC rule classifying crypto assets as liabilities. Coinbase seeks confirmation that banks can collaborate with third-party crypto service providers pushing for clear regulatory guidance. In July 2024, WazirX suffered a cyber attack, losing $230 million in digital assets attributed to North Korea's Lazarus Group. The exchange proposed a restructuring scheme to redistribute liabilities and recover stolen funds through token issuance, with creditor approval expected by April 2025. If approved, creditors will receive distributions through recovery tokens and other recovery mechanisms. However, if the scheme is rejected, WazirX warns that it could take several years, potentially until 2030, to resolve the dues, with significantly delayed asset distributions and lower recovery amounts due to liquidation costs. The Singapore High Court granted WazirX a 16-week moratorium in January 2025 to carry out the restructuring process. The article discusses the challenge of balancing speed, simplicity, and security in the digital payments landscape. Experts from Arculus Mastercard and Truist highlight the importance of minimizing friction in transactions while preventing fraud. Arculus Tap to Authenticate metal cards and passkeys are proposed as solutions for enhancing security without compromising user experience. As fraudsters adapt with sophisticated AI tools, businesses and financial institutions must use proactive fraud prevention strategies like Mastercard's decision intelligence. The key to combating fraud lies in combining technology consumer education and industry-wide security standards like passkeys. Ultimately, maintaining a smooth, secure user experience requires collaboration and a multi-layered defense strategy. Bitcoin's network activity has dropped to its lowest point in a year, signaling a potential shift in its performance. The Bitcoin Network Activity Index has fallen 15% since November 2024, now at 3,760, driven by a decline in transactions. The daily transaction count is down 53% from a peak of 734,000 in September 2024 to 346,000. A key factor in this drop is the reduced use of the Runes protocol for token minting, with daily OP underscore return code usage plunging from 802000 in April 2024 to just 10000 in January. Bitcoin's mempool also saw a 99% drop in unconfirmed transactions from 287,000 in December 2024 to 3,000 in February 2025. Despite this, Bitcoin outperformed the broader market in January, gaining 9.4%. Experts suggest that while Bitcoin's network activity indicates possible overvaluation, its volatility requires caution and thorough research from investors. That's a wrap for today's Chain Train. Crypto is evolving fast, from ETF adoption to security risks and legal battles. What's your take on Bitcoin's future and SEC's shifting stance? Let us know on social media, and don't forget to subscribe for more deep dives into the crypto universe. Until next time, stay sharp and stay decentralized.